All right. Hey guys, Brad here at Elliott Wave Made Simple. And today we are going to learn about corrective waves. Let's dive in to the first chart. All right. So as you know, a corrective wave is what happens after we complete 5 waves up. It would be good for you to go back and watch the first video in this series so you understand what we mean when we talk about a 5-wave move up. In this case, I keep using the bullish scenario, but keep in mind this applies to bearish scenarios as well. It is the exact same thing, except it's upside down. Literally the same exact thing, but it can be facing downward. In this case, it's a bullish 5-wave move, and the correction is what comes after it. The correction always is going to be in 3 waves. So in this video, we're going to cover what are the substructures like inside of these 3 waves? How do we measure for these 3 waves? What is the context that we should be looking for before we measure for a 3-wave move? So I'm just giving you the first clue, which is if you complete a 5-wave structure, what we should expect to follow is a 3-wave correction. All right, so there's a couple of things we need to keep in mind regarding these types of structures. All right, so one thing is, what type of corrective pattern are we looking at? There are 3: a zigzag, a flat, and a triangle. Now, for the purposes of this video, I'm not going to get into the triangle. That'll be a separate video. But zigzags and flats are the most common types of corrections. The biggest difference between the two are the sub waves, the way they are structured internally. What I mean by that is if we look at, say, for example, the A wave coming down, right? That first wave down after the 5-wave move, we're going to call that an A wave. What are the sub waves composed of in that A wave? Well, in a zigzag, it's 5 waves make up the A wave. In a zigzag, this is going to be 5 down. The B wave in a zigzag is going to be 3 waves. And then the C wave is going to be 5 waves. So just say in a zigzag, it's going to be 5 down, 3 up, and 5 down. For shorthand, we just say 5, 3, 5. So in a zigzag, you are going to expect to see the pattern play out as a 5, 3, 5. In a flat, the A wave is going to be composed of 3 waves. The B wave will still be 3 waves, and the C wave will still be 5 waves. So the biggest difference between a zigzag and a zigzag starts out with 5 waves down after the larger 5-degree structure, 5-wave structure completes. You're going to see 5 down. That's how you know it's potentially going to be a zigzag. After the 5-wave structure completes, if you see 3 down, it's very likely a flat. Okay, so 5, 3, 5 for the zigzag, 3, 3, 5 for the flat. Now we're going to get more into the details, which is going to help you discern what you're looking at. So before we get into those details, let's talk about this. Corrective waves really come in 2 styles: a steep angle or more of a shallow sideways correction. Both are still going to be labeled A, B, C, and both still give you a net retrace lower, but one gives you a more pronounced 3-wave move down, and the other gives you a more sideways looking correction. Okay, now let's take a look at exactly that, but now we're going to talk a little bit, we're going to bring in some Fibonacci into the conversation. So for a deeper correction, is more likely to see the zigzag with 5 down for the A wave, 3 waves up for a B wave, and then 5 waves down for a C wave that is going to generally target the 618 region. Generally, this type of zigzag that goes deeper all the way down to the 618 is generally found in the wave 2 position. So if you have completed 5 up and you believe this is the start of a new impulse for a wave 1, and you're expecting a 3-wave correction, take note of how this original move down is subdividing. Is it subdividing as a 5-wave move, or is it subdividing as a 3-wave move? So if it is a wave 1, it is very likely the majority of the time you're going to see an A, B, C that comes down deeper towards the 618. An example of a more shallow type of correction is typically found in the wave 4 position and generally gives you a shallow 3-wave correction, which is indicative of a flat, as we just learned, followed by another 3-wave move up, followed by the final thrust down in 5 waves as a wave C. Quite often, the wave 4 retrace doesn't get anywhere near as deep as the wave 2 retrace, which hits the 618. A wave 4 retrace typically targets the general region of the 382. Can it exceed that? Yes. 382, 50%. But as we learned in the previous video, wave 4 may not encroach upon the territory of wave 1. But that is already covered in the previous video, which, by the way, you can easily find in the playlist. So for a wave 4, it's more likely to see a flat correction, which does not come as deep, and it's going to subdivide as a 3, 3, 5 correction, as opposed to a deeper zigzag, which is typically going to be 5, 3, and 5. Okay? Now, to go a little more deep and to give you a better visual, let's move to the next slide and show you what a zigzag may look like. You're going to see the completed, here's the completed 5-wave structure. And then we start looking for, is this correction going to go down in 3 waves or is it going to subdivide in 5 waves? And now, since you've already watched my first video, you're going to understand what a 5-wave move looks like and how it subdivides. So if you think you are completing a 5-wave move up, you're going to be looking for a 3-wave pullback. And your first clue is, does this first leg down, does it unfold in 5 waves or 3 waves? Because that's going to help you discern what may happen next. In this example, it's a zigzag. So we're going to see a zigzag subdivides as 5, 3, 5. So you get 5 down, call that an A wave. Then you should be getting ready to see a bounce that cannot, well, I shouldn't say cannot. Very often, the great majority of the time, the B wave does not exceed the top of the previous high. Now, look, I don't want to make your head explode, but I have to keep it real with you. There are times when you will see the B wave exceed the top of the previous high. And the way you're going to keep your cool is if you've only seen 3 down and then you only see 3 up, if it exceeds the top of the previous high, but is doing so in 3 waves, then you can, the pucker factor will abate when this comes down and ruins the chance of this developing into another impulse higher. So yes, a B wave can exceed the top of the prior swing high, but your clue is going to be, is it 3 waves up? If it is still only 3 waves up, it can exceed the top of this previous swing high, and you can still reasonably expect to see a continuation downward. I know that's very difficult to discern, especially when it does a move like this, where the B wave gets higher than the previous swing high. But a great majority of the time, you're not going to see that. You will see it, but a great majority of the time, you're going to see the B wave get contained below the prior swing high. And one of the ways you're going to continue to dial in your clues is by how are these waves subdividing? Okay, so that is the story with a zigzag. Now, let's show you a real life example of a zigzag. So in this example, we're going back to gold earlier in July. You have to take my word that this completed 5 waves up. And what do we see here? 1, 2, 3, 4, 5 down. So after 5 wave up and I saw this 5 down, I'm thinking A wave, which means I'm looking for a B wave and I don't want to see it come all the way back up. I definitely don't want to see it developing as 5 waves, and I don't want to see it break the high of the previous swing. So we had 5 down, and then I can see this as an A wave, B, C. It did not keep coming. It did not unfold and develop in a 5-wave structure. I mean, you can clearly see that this A wave is composed of another 3 waves. So this A wave is actually a flat. 3 up, 3 down. You can't see it, but the B is actually there as 3 down, and then the C wave did unfold as 5 waves. So it's 3, 3, 5, whereas the A wave was just straight 5 down. So it's 5 down, 3 up, which means it clued me in. I should be looking for 5 waves. So I'm not going to look for a reversal until I see a completed 5-wave structure. Well, what did we get? We got 1, 2, 3, 4, 5 waves down. So that clues me in to look for a reversal. And then what you had was a reversal. 1, 2, 3, 4, 5 for a fresh 1, then a 3-wave correction right down into a target box. So, but now I'm getting out of the scope of this video, which is to help you identify and look for corrections. Okay, this is a very good looking zigzag. So now I want to come back to this chart to show you, just again, to reiterate, this is a flat correction, which shows you 3 down for the A wave, right? I just showed you a zigzag. This is a flat, 3 down for correction, 3 up for B wave, and 5 down for a C wave. And the B wave did not get up into the price territory of the top of the previous swing high, which is sure helpful. You see 3 down, you see 3 up, you expect to see 5 down. Okay, so let's go ahead and take a look at a real life example of a flat correction now. Before I was showing you in gold the zigzag. This happens to be GJ. And forgive me, I'm not sure what the date is of this, but it was recently. It must have been back in the late summer or fall of this year, 2024. So what we have here is we believe we have a 5-wave completed move up. And instead of 5 down, like what we would see in a zigzag, we have 3 down. So 3 down for an A wave. And then this B wave unfolded in 3 waves. B, right? 1, 2, 3. And then what we know is we're thinking, okay, well, if this is 3 waves, we want to see if that next decline can play out in 5 waves, which will clue you in to expect a reversal when this is finished. So really what I'm giving you guys here, I'm giving you the context, okay? Because there's really 3 things about Elliott wave that are amazing. The power in Elliott wave, the 3 things are context. And really what that means is if you understand where you are in a wave structure, you have the context of knowing what should you expect to see next. Like, what are you looking for next? Like if you eat a giant plate of Mexican food and you know your body is sensitive to really spicy food, if you know you just ate a bunch of Mexican food, you know what to expect. Okay, that's Elliott wave. It gives you context to know what to expect next. So that's one thing, context. The next thing is Fibonacci, which we're going to get to regarding these corrective waves. We're going to get to that in a minute. And the other thing is, what does the wave structure look like? Is it 5 waves? Is it 3 waves? Is it moving down? Am I getting a zigzag here? Am I getting a flat? Am I getting a triangle? So those 3 things put together is going to give you an edge over the market. The more you learn about Elliott wave, the more you learn about the character of these different waves, the more edge you're going to have. You're going to stop looking at the market as a bunch of random, confusing price waves that are going seemingly in all different directions, very confusing. How do you know what you're looking at? Elliott wave is based purely on price action, Fibonacci, and structure. Okay, so stick with it. It's a little tough to learn all these things. That's my mission, to help you learn this stuff and to break it down. But the more you understand about these things, the easier trading is going to get for you over time. the more consistently profitable you are. You're going to know where to put your stops. You're going to know where to let a runner run. Okay, let's get back now and keep talking about this flat correction in a real world example of the GJ. So we've come down in 3 waves. We got the B wave in 3 waves. So our context is, okay, we're looking for a correction. We got 3 down. We got 3 up. It's very sideways, consistent with a flat correction. And then you finally get a net retrace down with a 5 wave move. So this is a fantastic clue when you're trading this and you're saying, oh, okay, so now I'm getting a wave 3. This is obviously a wave 3. So what I should expect next is a 3 wave 4, and the final move down. So wave C is composed of 5 waves. So because I had 3 waves here and 3 waves here, now I'm thinking, oh, it's time for C wave. So once I can discern that this 5 wave move down is finished, I'm now looking for the reversal, and that is what we got. So this is amazingly helpful to understand these things. So now I want to move on and talk about a little more detail. Remember the original slide that we were looking at that was talking about corrections being deep versus correction being shallow. Well, guess what? Elliott wave noticed that too, Mr. Ralph Nelson Elliott. And what he discerned is that he created something called the theory of alternation. And that is corrective waves tend to alternate, meaning if the first correction, in this case, I'm talking about a wave 2, if the first correction is very steep and doesn't take up much time, then you can expect the next correction, which is going to be the wave 4, is going to not be as deep and it's going to burn up more time. In other words, the wave 2, if it's very steep and sharp, expect the wave 4 to take more time and to be shallow. So isn't that interesting? So again, this is context. No other method is going to give you this type of context to know what you should be looking for. So it gives you clues, and all of these clues add up to giving you an edge over markets. So it's called the theory of alternation. By the way, sometimes a wave 2 may be shallower, and maybe the wave 2 is elongated in time and takes more time. If you see a shallow wave 2, now like this wave 2 example, hopefully you're on the big screen, guys. Expand your screen to full screen so you can see these details. But this wave 2 came all the way down to the 618, and it did so very sharply and quickly. So you would expect this wave 4 to be shallower. And guess what? This only came just barely poked below the 236, which is a shallow wave 4. If you don't know what I'm talking about, you got to go back and watch the first video in the series. So, but this is a shallow wave 4. This is a relatively deep wave 2, but actually it's not that deep. What's remarkable about this wave 2 is how quick it was. It was just quick. It didn't use up much time at all. Bam. Now, it is 3 waves in there. You have to trust me on that. I did look at the substructure. It's 3 waves for this wave 2, but it didn't take any time off the clock. Whereas this wave 4 was very shallow and burned up. I mean, this wave 4 burned up about 5 more times than it took for this wave 2. That is the theory of alternation, people, and that is going to be your friend. Okay, so now I want to get into the Fibonacci aspect. So you recall how I was talking about the context that Elliott wave gives you and how we're looking at 3 things when it comes to corrective waves. We're looking at the context, we're looking at the structure of the waves. How is it subdividing? And we need to look at the Fibonacci, those 3 things put together. All right, so now what we're going to do is we are going to take a look at measuring a corrective structure. Okay, so in this case, we happen to be looking at silver. Doesn't matter. If we're looking for a 3-wave correction, we need to measure for it. Okay, so the way we're going to measure for the 3-wave correction is we're going to go use our trend-based fib extension tool. Regardless of whatever platform you're using, you're going to want to grab your fib extension tool, which is going to give you 3 clicks. So what the first click, what we want to do is put the first click at the swing high. And we want to do this where we believe the 5-wave structure has just completed and might be about to terminate. Now, in this case, we know it terminated because we've already got the wave structure here. So yes, I'm cherry picking this example to show you how it looks and how you measure for what could be a 3-wave correction. So in this case, we click the first of the 3 clicks at the top of the swing high. The second click goes at the bottom of the next swing low. And the third and final click goes at the top of the next swing high. In this case, that's 32,555. So now I'm just going to, I have my magnet on, but I'm going to move this over and I'm just going to put that right at 32,555. What you want to see, the first Fibonacci level you are looking for in a 3-wave correction is 100 fib. And really what this is saying, that first click between the swing high and the next swing low, when you create the third click, what it's telling you is that 100 fib is the length of the A wave. Let me repeat that. This 100 fib, what it is, this 100 fib is showing you the length of this A wave as projected from the top of the B wave. So this 100 fib is a projection down from the B wave that is giving you a Fibonacci relationship between the A wave and where the C wave might terminate. Wow, how valuable is that information? Pretty valuable, I think. So again, what you are measuring for here using Fibonacci is you are looking for clues of where might a C wave be expected to terminate. And I can tell you now, a great clue for a C wave is that it's going to come down and target the 100 fib. Okay, that is a standard type of Fibonacci measurement in the world of Elliott wave. C wave may frequently target the area of the 100 fib. Another way to say this is A equals C. When anytime you hear somebody talking about Elliott wave, if they say A equals C, what they mean is this 100 fib, if the C wave had come down and just touched that fib and then bounced, that would literally be A equals C. The length of the A wave is equal to the length of the C wave. Now, that is one parameter. There are 2 more I'm going to give you now, and that is the 1.236 fib and the 1.382 fib. You can pause the video, screenshot these settings, create them, and then create a template and save it as A equals C. Now I have 2 templates saved. One is saved as A equals C, and the only 2 fibs on there is the 0 mark and the 100 fib. That is A equals C, literally. The extensions for a C wave often target either the 1.236 or the 1.382. So let me show you. This is what those fibs look like. So now that we have this 3-wave correction that this is absolutely acceptable as a C wave because it's within these yellow fibs. And this is just giving you a clue. So what I like to do, if I feel confident about the 5-wave move up and the 3-wave correction coming, as soon as I think the B wave may have topped, let's just say, for example, price was only right here and it hadn't made it down to these fibs yet. What I often do is I put a buy order at the 100 fib, I put a buy order at the 1236 fib, and I put a buy order, heavy buy order at the 1.3. So in other words, I go bigger the deeper it comes down into support. That's one way. I'm just giving you a tactic. I don't do that every time. It depends. There are variables to that. Depends what instrument I'm trading. Depends how small I can get, because you want to stay small if you're going to be layering in. But I don't want to conflate things for the purposes of this video. The main thing I want you to understand is that when you're measuring for a 3-wave correction, the overall structure you want to see it relate. That C wave should relate to a 100 fib, the 1236, or the 1382. Now, again, this is a fantastic clue, because if this price keeps coming down now and makes it all the way to the 1618, is very likely that this count, as we call it in Elliott wave, is wrong. We call that invalidation. Well, it's wonderful to know where you are wrong. You know, a lot of guys are afraid to be wrong, and they want to be right so much that they don't retain their objectivity. And that's the other wonderful advantage of Elliott wave. Once you learn how to do this, you're going to find yourself viewing the market in a more objective manner, which is fantastic. So you're going to know where you're wrong, which is wildly helpful. Like if you've ever taken an entry and then it goes against you and you say, well, okay, I'll just add more. And then it comes against you more. And now your mind is blown because, oh, I'm taking this huge heat. Oh, screw it. I'm just going to, it's got to go up because now it's come down so far. I'm just going to add more. Don't do it. Don't do it. If you're using Elliott wave, you know, just for example, if this comes back down into and makes a new low, okay, all right, I could live with that. But if it keeps coming and gets below the 1382 and it looks like it's got some big fat red candles and it's really coming down, caution, caution. And if it hits the 1618 and then bounces, I would probably use that as an opportunity to get out of my longs, because it's very likely going to come down and complete a 5-wave structure to the downside, a larger 5-wave structure. And okay, so now I'm getting, I don't want to make this video too long because there's a lot of other ways I could keep talking to keep teaching, but for the purposes of this video, just make your fib tool, create a template, call it A equals C to the 100 fib, okay? And then create another one called A equals C extensions, and the two extensions you want is the 1236 and the 1382. All right, so practice this. Go back and look at your charts and practice measuring 3-wave moves. Now look, here's another wonderful thing about Elliott wave that I'll tell you, then I'm going to end this video. Sometimes I'm just measuring stuff all the time. It's great practice. Measure moves, even on the nano scale, measure moves. And what you'll see quite a lot are these 3-wave moves all over the place, especially on the nano basis. And if you're a scalper, this is wildly helpful because you can see 3-wave moves, you can measure for them. And once you get a little experience doing this on the lower time frames, not even talking Elliott wave, just talking measuring stuff, you'll see symmetry in the markets where price likes to, if it retraces and then it makes a new high, it likes to go to the 100. Even if it's going to keep going higher, it's going to see some rejection at the 100. So as a scalper on the lower time frames, you could almost trade just this fib setup right here on the nano basis. You could trade that over and over again. You truly can, without even any concern for the overall Elliott wave projections. If you're just taking your gains quickly, use this tool to look for the 100 fib, and you will find it. And once you get good at it, you can scalp. You're going to have much greater percentage success doing this, and you also know where your stop goes. Okay, so that's it. Listen, if you have questions about these corrective waves, drop them in the comments. I do read the comments. I will reply. Also, I want to say thank you for guys buying me a coffee. It just encourages me to keep making these videos. It's not really about the money. It's about the energy that's exchanged. I'm putting this energy in. You buy me a coffee for $5 or whatever. You're giving me some energy back. I love it. I receive it, and I keep it going. So thanks in advance for the coffee. Thanks for watching. Go ahead and subscribe. If you're new about the channel, I do a lot of analysis based on Elliott wave. Subscribe, hit the notification bell so you'll know when I drop new videos. All right, guys, thank you so much for watching. I appreciate you. I hope to see you back on my channel. Ask me your questions. I will reply. God bless you. Take care. Bye-bye.